Hi there, welcome to Kneppy Invest and welcome to another technical update video. It is 29th of June 2025. Time is currently 11:07 a.m. So I'm recording this video a little bit later than I usually do, or want to do anyway, on the weekend. And the main reason behind that is because I went for a long run this morning, a very pleasurable long run. Okay, now the agenda for today's video will go through indices, commodities, also have a look at crypto, bonds, currency, and then we'll have a look at some individual companies' charts that are intriguing or interesting for various reasons. Now, during the weekend, typically I go through all my watch lists and I do write down some of the charts that I probably should pay attention to over the next week, and I have written down so far about 15 companies' TIG codes. I haven't completely gone through all the watch lists at this point in time, so I'm falling a little bit behind, but there's a lot of really interesting charts out there, and I find this is true every single week. Every single week, there's a lot of opportunities out there, and you're going to miss a lot of these opportunities. That is an absolute no doubt. I think the key is to find those opportunities that give you the best chance of success in the short, medium, and long term. Ideally for me, a trading position means I'm holding that particular position for as long as possible, maybe as long as 5 or 10 years. And if that does happen, more than likely the share price of that particular company has gone up significantly during that period of time. Okay, so let's start off with looking at the XJO. I have a feeling it might have been slightly up during the week. Slightly up 0.1%, a bit of an indecision in the market. That's almost like a doji, an absolute perfect doji, almost. That means the market really hasn't gone anywhere, but the difference between the high and the low of the week was quite a lot, maybe not all that much. In fact, it was about, we'll say about 2.2%. So there was a bit of indecision during the week, and we did see that on individual days as well. If we go to the daily chart, there was a really good day on Tuesday, up 0.95%. Friday was maybe a little bit concerning because even though the XJO was only down 0.43%, from the high to the end of closing, it was down about 1%. And the main reason the XJO was down, a lot of our other indices were down, is because of the banking sector. Banking sector had a bit of a bad day, down 2.24%, but I'll talk about that in a second or so. Now, if we just have a look at the full picture right here with the XJO, we have found a bit of resistance, which is understandable because where we are, say between 8,500, 8,600, were the highs the XJO did achieve back in February of this year. And the XJO is finding it hard to get above that level. It's finding hard to get to new all-time highs. The other thing I should also mention is I do go through emails, and I'm noticing more and more emails from experts saying how overvalued the market is, that they are concerned, that sort of thing. I'm seeing that more and more now. There was also a few podcasts like Talking Wealth, had a podcast during the week, which was titled, let's see if I can find it now. I haven't listened to it yet. Retail investors driving stocks time to exit. Wouldn't be surprised if they're turned a little bit bearish right now. So I am feeling or sensing a bit of bearishness within the market. Now, that could be a good sign that the market will rally from here because maybe the experts are going to be completely wrong. But anyway, we are seeing signs that we are at a resistance point right now, and which way it goes from here is anyone's guess. But over time, the markets go up. That's one thing we do know. That's an absolute. Over time, or within who knows how long, the XJO will get to a new all-time high. It could be in the next week. It could be a month from now. It could be a year from now. It could be 5 years from now. But eventually, the XJO will get to a new all-time high. It's just finding a little bit of resistance right now. Maybe it's because of overvaluation. And we have seen the XJO go on a pretty nice run. Well, most indices have gone on a pretty nice run over the past 3 months. And don't forget, and this is the other thing I've heard a fair bit about recently, a lot of the experts are saying the retail investors are sort of ignoring that there was a 3-month pause on tariffs, and that pause on tariffs ends in about a week and a half or something like that. And it seems like the market is just completely ignoring that. Okay, so the XGO, I wouldn't say it's looking toppish, but we're either in a consolidation phase right now, going sideways, or it's at a resistance zone. And which way it goes from here is anyone's guess. I'm not going to try to forecast that. I'll just wait for it to move before I'm a little bit more confident which way it's going to go. XSO Small Caps actually did finish the week up 0.28% on Friday, but overall for the week, I'll be shocked if it's down. Up slightly, 0.41%. And just like the XJO, XSO is at a resistance level. And that resistance level is around 3,240. And this resistance level goes all the way back to October last year. So it's not that far back. But we have seen the XSO get this level a few times. 1, 2, 3, 4 times now. And not really advance much further from there. Now, you could argue that the most recent high was slightly higher than the high before that, which was in February, which was slightly higher than the high before that, which was in December. So you could actually argue that. We have seen a couple of successive highs for the small caps. And just like the XGO, we did see a little bit of selling coming in on Friday's session. I don't think we're going, and we'll talk about this when we get to the USA. I don't think we're going to see a bit of a sell-off on the ASX on Monday just because Dow Jones was up 1%, which is a pretty good lead-in. Pretty good lead in from Wall Street. What about the ASX 20 down 0.56%? And this is also weakness in this particular index on Friday caused by banks because banks are heavily weighted. In fact, what was it? 4 of the 5 or 6 biggest companies on the ASX are the banks. So if we do see weakness in the banks, that should lead to some of these indices falling. It should, like the XTL, XJO. Anyway, now, for the XTL, I have put this purple box, which is a resistance zone. Now, in my opinion, most resistance areas or levels are more like zones, and that's why I do prefer sort of boxes. But sometimes I'm just lazy. I'm too lazy to put boxes in. And at this point in time, the XTL is in that purple box. So this is, in my opinion, by my definition, a bit of a resistance zone. So it is finding it hard, XTL is finding it hard to get to or above the top of this resistance box. And when it does, that would be a good sign. That would be like almost like a breakout for the XTL. Now, tech finished the week on a high note, up 0.97% on Friday. And for the week, only up slightly, 0.45%. And in fact, I have put another box for the XTX. There it is. In fact, I can expand this box now. There it is to the right. Anyway, so we have seen the XTX get into this purple box a few times in the past and has struggled to get above it. So the first time I got into this box was back in November, got back into the box in February, and recently got back into this box. You can just sort of see the XTX just rolling over. Which shows again that it might be a little bit of resistance at these levels. So again, we are seeing indices move into these resistance areas. And in fact, some of these indices have moved into these resistance areas within the last 2 or 3 weeks. So that also means we haven't seen any strength in these indices during that period. Now onto the banks. XP finished the week on a really negative turn, down 2.24% on a Friday. Maybe there's been a bit of rotation of money from the banks into mining. Understandable because the banking sector is significantly overvalued right now. There was another interesting article, I think it was in Livewire. It just showed the P ratio of CBA going back to 2000. And typically it's between 10 and 20. And the average is about 15. Now it's over 30. So if you have a look at this particular article in Livewire, you can really see, I forget what it was called, Livewire CBA. I think it was why do fund managers hate the banks managers or hate CBA? Why is CBA the most hated rally on the ASX? I sort of understand why fund managers hate it. Because they would be fairly bearish on CBA, so they wouldn't have much money in it. But here it is. Yeah, it was this little chart here. So this goes back to 2005, sorry. And yeah, you can just see CBA's PE ratio sort of, excuse me. sort of between 2005 and really right now, it has been between 10 and 20. So whenever CBA gets to a P ratio of 20, it's expensive. When it gets to like a P ratio of around 10, in fact, I would have said 12. That's actually a pretty good buy for CBA. And right now, it's more like 32. So that's well above what you would expect for CBA. So that's just looking at PE, and you could look at price to book as well for CBA, and that is at abnormally high levels. So a good article from Livewire, and that's one of the reasons why I probably would expect a bit of weakness in the banks. It would be hard to see how the banks rally significantly from here unless we see some really good financial numbers, and that's going to be hard for the banks. Now, the other interesting thing, we saw a really good rally in the banks from the start of April, and we did see that really big down day. Now, when you go back through time and have a look at the previous tops, it's always followed by a significant drop. So if we go back to July 2024, it's a nice rally, and then over 3 days, the banking sector went down 0.6%, 2.8%, and then 4.99% before it found a floor. And then the next high, after a nice little rally again, banking sector went down 2.67%, 1.81%, and then dropped a little bit more from there. And yeah, we see that consistently with the banking sector. After a nice rally, we tend to see a few big down days. So I wouldn't be surprised to see that, but wouldn't be surprised to see, because of what happened with Dow Jones, that this could be just a one-day sell-off. Sort of like we saw back on the 5th of May. There was a one-day sell-off there, down 1.78%. Well, you could say, actually, no, it did fall a little bit after that. It wasn't significant. Anyway, so other than that, this particular chart doesn't look all that bad. In fact, it would be my favorite chart among all these so far because it's just pulled lower from all-time highs. Anyway, that's all I have when it comes to the ASX. What about New Zealand? Had a pretty good end to the week there, up 0.83%. And otherwise, if you have a look at the daily chart for the NZX50 index, nothing much to get excited there. In fact, I'd say this is trendless. Okay, now on to the Americans, the Wall Street, the United States, whatever you want to call it. NASDAQ up 0.39% to end the week. All-time highs. In fact, NASDAQ had a really good week, up 4.2%. There you go. Up 4.2%. I'm not complaining there at all because I do have a fair few holdings in the NASDAQ, and I have not taken any profits. In fact, this chart looks really good. Now, at the end of last week, it was like, whatever. But this might be considered a bit of a breakout. Getting to new all-time highs, getting past this resistance level. So this looks fairly bullish. Now, one thing I'm starting to look at more and more is equal weighted stuff. So this is a NASDAQ 100 equal weighted. Not quite as bullish, but not far off. So right on the previous highs, this particular index saw back in February. So the reason I might look at this is what has been leading the charge for the NASDAQ has it been the Magnificent Seven? And I think there is a bit of an argument that the strength in the NASDAQ over the past week might have been with some of the bigger companies, including NVIDIA. And if we have a look at NVIDIA, it did have a pretty good week. Yeah, it had a really good week. So I'm wondering, in fact, NVIDIA was up almost 10% for the week. So I'm just wondering if a lot of strength in NASDAQ was caused by companies like NVIDIA. I didn't have a close look at the rest of these charts. I'm not even sure, why is Facebook not trading? Invalid symbol, what's happened there? Have they changed a symbol or something? Anyway, so maybe that's one of the reasons why the NASDAQ has rallied, just because of companies like NVIDIA. By the way, NVIDIA now is at all-time highs. There you go. Okay, back to United States. I think that's all we should look at when it comes to NASDAQ. Dow Jones Industrial up 1% on Friday. I don't mind this chart now. Another good week, well, maybe not another, a good week for the Dow Jones. In fact, it was up 3.82%. So that really good week we saw in the United States didn't really translate to the ASX. So maybe we're going to have a really good start to our week. But I don't mind this chart. It looks much better than it did this time last week. And it is at Almost, oh yeah, it is a three-month high. So 3-month high for the Dow Jones. So showing a little bit of strength here, but still well away or well off the all-time highs that we saw back in January and December. And what about the Russell 2000? Not a good end to the week. So a little bit of weakness in the small caps, only up 0.02%. I don't mind this one either, but nowhere near as good as the Nasdaq and the Dow Jones. So it looks like most of the heavy lifting in the United States is being done by the bigger companies. And some might perceive the bigger companies as being better. Now, I don't believe exactly that. Just because a company is bigger doesn't mean it's better. I'm sorry, Rudy. I do know you believe that. Absolutely. You believe bigger means better. I don't believe that. Absolutely. I do believe there are really good small companies. And sometimes those small companies can be ignored by the market. And that does give us opportunities. Anyway, so I wouldn't say weakness in small caps in the United States, but not as much strength as we have seen in the bigger companies and the bigger indices like Nasdaq and Dow Jones. Okay, now onto international indices. I do know one of these looks really interesting, and that is the Nikkei. Look what's happened to the Nikkei in the last 2 trading days. A little bit of resistance at about 39,000, and then just bang, bang. 2 really good days in a row for the Nikkei. In fact, the week itself up 4.55%. Now, it's still, you can see by the week in the weekly, it is in this level, which I'd probably define as resistance going back to February of 2024, got to this level then. So Nikkei has been going sideways, but it has got to a medium-term high. And if it gets above about 40,280, that would be a year high, almost a year high. So a little bit of strength in the Nikkei. Again, I don't know what's been happening there. Not as much strength in the Hang Seng. In fact, Nikkei up 1.43% on Friday, Hang Seng down 0.12%. So not all Asia showed strength, maybe just the Nikkei. Hang Seng is near the highs it saw back in March. So getting to that level, but I don't mind this chart. Still looking pretty good. If this was an individual company, I'd be happy holder if I was holding it. Would not be concerned at all by this chart. So even though it was down a little bit on Friday, and by the way, the week itself was pretty good for the Hang Seng, up 3.2%. So no complaints there. And even the weekly chart looks pretty good. What about the DAX? I can see it was up 1.62% on Friday. For the week itself, DAX was up after a couple of down days, up 2.92%. And the daily chart probably looks pretty good. Yeah. So we had a bit of a pullback and now it's starting to go higher. Now, when we see it starting to go higher, that means we want to see it get above the previous high. So that's 24,400. If it can't, that could be the sign that the uptrend is coming to an end. So it looks like things are starting to move up again for the DAX. What about the FTSE? Not as good as the DAX, only up 0.72%. And yeah, so not quite as good as the DAX, but still not that bad. And for the week, DAX up only 0.28%. And the TSX, funny enough, down 0.22% on Friday. It's going to be interesting. I would assume that our futures are up. In fact, we can see because AP1, our futures are up, but our futures ended, I believe, early on Saturday morning. If you have a look at the daily or the 1 minute chart for our futures, it ended on Saturday morning at 6:59. So that does take into account, our futures does take into account the rally on Wall Street and only up 0.6%. Now, I do think that we are more aligned with the TSX than, say, the Dow Jones. Definitely more aligned with the TSX than the Nasdaq. So it's interesting that the TSX was actually down 0.22%. So don't be surprised if we don't see a really big rally on the ASX. And I think I did write or draw this little rollover sort of line. So there is a chance that maybe TSX showing signs of rolling over. But this index looks better than all our indices combined. So more strength on the TSX. Okay, that's the indices, or all the indices I really want to talk about. Now on to commodities. Gold. Bit of weakness in gold. Not the best week for gold. In fact, it was down 2.8% for the week, so 2 negative weeks in a row. If you have a look at the weekly chart here, there's no reason to become distressed or nervous, I suppose, just yet. It's still in a really nice uptrend. Even the daily chart doesn't show any negative signs. Now, the one negative thing you could say is the most recent high didn't get quite as high as the last two highs, sort of maybe like a triple top, that sort of thing. That could be maybe a concern or a slight concern for you, but I wouldn't be overly concerned just yet. I wouldn't be selling all my gold holdings just yet based off this chart, but keep an eye on it. Keep an eye on it. So gold, sort of like still looking good. No reason to be concerned, but make sure you keep an eye on gold moving forward. Some of these other commodities are looking much better. Silver looks pretty good, if I remember correctly. No complaints with silver. I don't mind this chart. In fact, would I prefer this chart over gold? So weekly silver was sort of up a little bit. It's up 0.98%. I do like, if you have a look at this weekly chart, there was that really good week a few weeks ago. Silver's up 9.42%. And since then, silver's gone sideways. That's a sign of strength. It's gone sideways, a bit of a consolidation period. You probably should be able to see that on the daily chart. Yep, so a really good week. It's going sideways. I don't mind that. So silver's looking pretty good. Woo, do I prefer this, or would I prefer this over gold? That's why I said woo. Actually, I maybe would prefer this over gold. Just slightly. Just slightly. What about copper? Copper. Copper is at a nice level. Copper, right on this little sort of resistance level. Now, this is when I should put a box. I forget where the boxes are. I think the boxes are here. A rectangle. This is where I might just put a box like that. I'll put it like that, sort of hinting that there is a resistance at this level. So copper back in May 2024 got into this sort of purple box and fell away. He also got into this purple box back in March, so not that long ago, and then fell away significantly and is back into the purple box. We can get rid of this line because I've got a box there now. So this is sort of a resistance box for copper. If it gets above this purple box, all bets are off. Now, I do like this chart. I do like how it's rallying, starting to rally. A pretty good week for copper, I believe. Yep, up 5.99%. So I do like this chart. And in fact, I might prefer this over silver and gold slightly, but it is in that resistance zone. So let's wait and see what happens moving forward for copper. So there's a few copper companies on the ASX. Some might say BHP. And copper is a big part of BHP, but I still think well, a bit of a coughing fit there, and I didn't have any water with me. Anyway, I have no idea what I was talking about. Something about BHP. I still think BHP is more aligned with iron ore than copper, even though BHP, if you have a look at one of their quarterly reports, they always mention copper first. So I think the management of copper wants BHP to be thought of as more of a copper company than an iron ore company, but the market doesn't think that at all. And you can just see the correlation between BHP share price and iron ore, and you can see the share price of BHP just move almost perfectly in line with iron ore, not copper. So you can see the chart of copper going on a nice run. And if you have a look at BHP, it hasn't really done that, although it did the last day because iron ore had a pretty nice day. Talking about iron ore, did have a nice day on, was it Friday, sorry, up 1.28%. But so far, even though we have not started Monday yet, it is down. So, and to be honest with you, this chart does not look all that good. So even though some of those iron ore companies had a nice run, the iron ore chart is a big murph for me. It is in a support zone. So I've got two lines to sort of indicate that support zone goes all the way back to the middle of 2024. So this is probably, or maybe this is a time to think about buying iron ore companies because it is in a support zone. Probably my favorite commodity chart, probably won't, for those who don't follow me closely, probably won't be all that surprised, is uranium. This is my favorite looking chart by far. And a few reasons why this is my favorite looking chart. We've had a crossover in the moving average, and just as we had that crossover in the moving average, the price of spot physical uranium, and you can see the same thing with uranium, it's moved above the downtrend line. That's bullish. So I love this chart. This is one of my favorite charts. And that's one of the reasons why I took a position in Palladium, and I'm thinking maybe taking positions in some other uranium companies. I just love this chart for uranium. Sentiment has definitely shifted. It's definitely shifted. And this is exactly what I look for in a chart. So maybe this chart should be studied. Okay, uranium. So my favorite chart. Oil. Well, oil. Hopefully no one bought a lot of oil companies when it went on a nice run. Maybe I should have sold my only oil company. Well, I've got two, but Karoon Energy is my trading position. And I've got this support box, even though oil did fall below that support box for a period of time. But around about $64 to $68 is a nice little support level for oil. And I suppose you could say you can buy oil if it falls below that, which is exactly what I did with Karoon. Okay. What else? I don't think any other commodities are looking interesting. And what I might do with future videos is I'll just focus on those core, we'll call them core commodities, gold, silver, copper, iron ore, and uranium and oil. And then I'll just have a look at one other commodity that might be looking interesting. And today I'm going to turn my attention to Palladium. And I might start including other commodities as well. Palladium I do like. So this is a nice little rally with Palladium. Now, if Palladium did not rally back in October last year, this would look even better. Now, there is a bit of resistance at 1,200, and hopefully you can see why there's resistance. Apparently I cannot put lines straight there. That's that line straight. Hopefully you can see why 1,200 is resistance for Palladium. You can see Palladium going on a really nice run in December 2023 and fell away. Went on a really nice run in October 2024 and then fell away. At that level, almost identical. And so it's going to be interesting to see if the same thing happens again for Palladium. But if it doesn't, if we see it get above, say 1,240, that would be a breakout. I do like this chart for Palladium. Now, in saying that, I liked it also back in September, October last year, and then that sort of failed away. So even though it does look sort of similar than then, I do prefer this right now. So Palladium does look good. Okay, now on to Bitcoin and Ethereum, crypto. And there's not much to talk about here. It's like it's just meh. In fact, the last 1, 2, 5 trading days for Bitcoin, nothing much has happened. No volatility, very little movement in the day. Anyway, it's still not at all-time highs. No significant short-term trend. At least the medium trend looks okay. I'd like to see Bitcoin at least get to a new all-time high soonish rather than lateish, but nothing to complain about with Bitcoin at all. Ethereum looked a little bit bearish because it did fall below the bottom of this trailing range. That was last week, Saturday, Sunday last week, and then rallied nicely on Monday to get back into the purple box. Not the purple box. I suppose you could put a box there, but sort of the bottom of the trading range. And since then, you can actually see Ethereum just move going sideways, just above the top of the bottom of the trading range. So I'd say this is just consolidating right now. Just consolidating, but it is nice that we did see a bit of a sell-off at the end of last week, and then we saw some buying coming in to push the price of Ethereum back up. So don't mind this chart, but not the best looking one. Okay, now on to bonds. So we have a look at bonds and currency. 30-year bonds has been dropping away the last about 3 or 4 weeks. It got above 5%, and I thought, ooh, that's interesting, and has slipped away to 4.833%. Now, that does not necessarily mean it's in a downtrend. We'll say it's a short-term downtrend, a very short-term downtrend, but who knows what's going to happen with this one. So overall, say over the medium to long term, it has been going up. We've just seen a bit of a pullback. And if this particular uptrend continues, we need to see it get above 5.1%. And currency, Aussie dollar. All the talk is how weak the American dollar is. We haven't seen much strength in the Aussie dollar compared to the American dollar. Well, a little bit, but not a lot. I'd like to see a little bit more strength with this. But at least it's staying above 65 cents. I'd like to see it get to about 70 cents. I'd like to see it get to 70 cents. I'm sort of putting off buying some stuff. Now, just because I just want to see the Aussie dollar rally, and I don't think it'll fall much from here. So I am putting off buying some stuff in America at this point in time. And when I mean buying stuff, I mean maybe like motels, that sort of thing. Not really doing it right now. Okay, now onto some individual companies' charts. I do have a few here that look interesting. A few companies I know nothing about, like Yojee, whatever that is. The first one is Spark New Zealand. Share price of this company has dropped a lot, and looks like TradingView has really slow. So Spark New Zealand has dropped a lot. It's dropped from about $5 down to a lower 180, now at 223. So there is potential really good upside for Spark New Zealand. And let's not forget that the New Zealand economy is sort of recovering, coming out of recession or something like that. And we're starting to see this particular share price of this company move up. I think we're going to see a moving average crossover soon. And I don't mind this chart. You can just see how the share price is just gradually moving up. And I like that. So potential buy here for Spark New Zealand. And that's after they did release a pretty negative update on the 21st of February. So we're talking about what's that, 4 months ago. So this one maybe to keep your eye on with potential nice capital growth and even maybe a nice dividend. What's the dividend? Dividend yield of 10.95%. I think when they do release their dividends for this year, it's probably be lower. So wouldn't rely on a dividend yield of 10.95%. But I think there is a chance that we are starting to see the sentiment in this company shift to be more positive. I'm going to keep this short. I'm not going to talk about PEXA, Civmec. Actually, I will talk about Civmec. This is one I was trading recently. Come on, TradingView. Just take your time. No need to rush. Maybe I'll get rid of. Some people said, "Oh, you've got too many tabs open." No, this is a new computer. It's TradingView. That's a problem. Oh, you've seen some of my bank videos there. Okay, Civmec. So I was trading this. They released something really negative back in February. So there must have been results. They've released some positive things since then. That's why we started to see the share price starting to go up. We've had a moving average crossover. Share price is at a 4-month high. So don't mind this chart. Now, I would prefer this to be at least like a year high, 6-month high. I'm just a little bit nervous. Not nervous, probably not the right word. The share price was significantly higher not that long ago. So there might be a little bit of resistance. But with the strength of some of the announcements they have released, possibly that resistance can be met by some of the buyers coming in. Lynas. So Lynas is, I think, in a nice little uptrend. We did see the share price pull back on Friday. Is this a buy the dip situation? I don't mind this chart for Lynas. A little bit of volatility in there, so I think you could buy a little bit lower. So if I saw the share price drop to say $8, so another 10% lower than here, that could be a nice little buy. But you wouldn't want to see it fall any much further below $8. 29 metals have had problems in the past. Share price has dropped a lot. Most of the problems because of flooding. And share price did reach a high of 288 back in March. Now, they've probably done a few capital raisings because of those problems. But this is probably the bullish this chart has looked for a while. In fact, yeah, it probably looked bullish just after they first listed. But a little bit of strength showing in 29 metals. I don't mind this chart. Also, this is copper. So copper price is rising, also helps 29 metals. What about WA1 Resources? This one I used to talk about a few, maybe I wouldn't say often. The share price was in a beautiful uptrend. Beautiful uptrend from, well, it broke out in October 2022. Share price about 33 cents. Share price went from 33 cents to $22. So really, long sustained, nice uptrend for WA1 Resources. Once it got to the high, we saw a fair bit of volatility, a lot of volatility in the next few months. You can see share price dropping 14% and then rising 27%, and then dropping 6.5 and 10.8%, then rising 7.8%, and then another rise of 11.2% before dropping 7.2% and 9.4%. So a lot of volatility just after the company reaches high, which I sort of understand. You're going to see a lot of day traders entering and leaving. The share price had been on a run, a lot of profit taking, that sort of thing. And when the share price drops a lot, you get a lot of these buy the dip investors going, oh, share price of this company, or the company is much cheaper now, I'm going to buy some shares. And that's why you see a lot of volatility. Share price, or the chart, didn't look any good after that. In fact, you could say probably a bit of a short-term downtrend, at least. Sort of do that. It's not a perfect downtrend, but when the share price got above that particular downtrend line, which is not perfect, and we also saw a moving average cross, after that, we have seen a nice little rally in WA1 Resources. The only thing I don't like is the lack of volume. We haven't seen big volume coming in. So chart doesn't look that bad. Probably the only thing I don't like is volume. Okay, one of my favorite charts is IVE Group. Someone mentioned this company in the comments section. I had a look at it and I was a little bit surprised that I liked the company more than I thought I would. And the chart looks pretty good. Share price got to this resistance area, which goes all the way back to the highs back in 2023. And the share price hit that resistance level and then pulled back and tried to get above. You can see the share price oscillating above and below that resistance line for about a week, and then started to go down. And then in the past week, we have seen the share price take off 2 days in a row. Really nice 2.2% and 2.1% rally on Thursday and Friday to get to a new all-time high. So I do like this chart for IVE Group, and not that expensive either. P ratio of about 10. Okay, next one is Brisbane River Industries. This is the sort of chart I'm always looking for. Share price has been in a downtrend for a while. Share price has dropped from $2.50 to almost $3, all the way down to $1 and about 15-20 cents. We've seen a moving average crossover, a nice little rally. Well, sort of a weird rally on Tuesday. Share price then went up 6.4% on Wednesday, and a little bit sideways the next few days. We've had a moving average crossover. Share price now at a multi-month high. So we're talking about a 7 to 9 month high. This is the sort of chart I'm looking for every single, maybe not every single day, but every single week. So Big River Industries has popped onto my radar. In fact, you could have gone back to last week and say, oh, this is starting to look interesting, but we didn't have the moving average crossover at that point. So I do like this chart for Big River Industries. The one thing I don't like about this sort of setup is it's not on the back of any financial news. That's what I really like. Share price breaking out on the top, on the back of financial news, good financial news. There is some strength to that. Now, what the market might be thinking is this company will release a profit upgrade. Don't know. But the market is starting to like this company a little bit more than it has in the last few years. Liontown Resources. So keep an eye on lithium companies. This is one. What's the other one? I've put down Core Lithium, Liontown. This is showing signs of consolidation. I think the downtrend has come to an end, maybe, has been in there for a while. And this is showing signs of consolidation. The very fact we've had 3 moving average crossovers is sort of a test to that we've got no trend anymore. We've got no trend. In fact, you might even say we are starting to see a bit of an uptrend developing. Now, if the share price didn't rally back in May, you see a nice rally and then pulled lower. If we didn't have that, this would look even better, particularly if the share price gets above 75 cents, because that was the highs back in March. So looking better for Liontown Resources. Who is willing to buy some shares in this one? The one thing I don't like is probably lack of volume. Would like to see a little bit higher volume coming in. Audinate. Keep an eye on Audinate. Own shares in this one, but I'm waiting just for signs of a shift in sentiment and the trend of the share price. And at that point, I probably will add to my position because I do think there's some possible value at these levels. And we're maybe seeing the first signs at least the share price is going sideways. So downtrend, I think, has definitely come to an end. The low in the share price was back in 7th of April at about 5.30 for 8. And yeah, I do like this chart. This is sort of exactly what I'm looking for also after a long-term downtrend. Want to see share price going sideways, moving averages going sideways, and then eventually share price turning upwards, preferably on positive financial news. Tyro Payments. Downtrend line for a while. Yeah, I put this downtrend in line, I don't know how long ago. In fact, it's a long downtrend line starting in December 2022 when the share price was $1.75. And it has acted pretty well, this downtrend line. Share price tried to break out back in February. You can see share price rallied on February the 26th. I wonder if that was on results. And then the sell-off came just after that. So a lot of selling came in, which shows there were still sellers there wanted to sell out of this dog stock because the share price had dropped from when they bought. And you just see the share price just sold off after that. And we did see the share price get to a long-term, if not an all-time high, or low, not high, back in April at about 65 cents. And then we saw a bit of a rally. Not sure what caused that. Share price broke out above that downtrend line on the 5th of May. Share price sort of went sideways for a while. There was a bit of a sell-off on the 5th of June. Share price touched the downtrend line. So that downtrend line was resistance, and then it became support. And it tested that support level on that particular day. So it looks like the downtrend for Tyro Payments has come to an end. I would like to see the share price get above about 8.95 cents. That would be a nice move for Tyro Payments. Doug Technology, a company I've traded in the past. Share price was in a downtrend. I was thinking, ooh, this company looking more and more interesting as it fell. Share price dropped all the way down to 88 cents back in April. And we've set a moving average crossover. And this is definitely the sort of chart I'm looking for. Now, doesn't mean the share price will go into an immediate uptrend. Share price could go sideways, but I think the downtrend has come to an end for Doug Technologies. Don't mind this chart at all. So if we go back, so this is when I started to get interested in Doug. So before this, they listed 2020. There was no reason to be interested in Doug at all during this period. Maybe in June 2021, share price was going up, but didn't last very long. Share price then moved into a downtrend. We can see the share price starting to move sideways in August 2022. Did get to a new all-time low on the 2nd of November, but then we saw the share price starting to rally. We had a moving average crossover, and I didn't really get that excited until the share price got above 64 cents. That's when I went, oh, this looks or starting to look pretty good. So it took a bit of time for me to get more excited about Doug back then. So this is sort of the chart I'm looking for. You just see that nice breakout, share price moved into uptrend, and it didn't. Then you're just waiting for signs of the uptrend coming to an end, and those signs were quite apparent back in September of last year. And then it moved to a downtrend. Question is, we just don't know how long that downtrend could go on. So I'm thinking this is the sort of first signs that the downtrend has come to an end, and is the share price going to go sideways for a long time, or is the start of the uptrend? Now on to Yojee. No idea what this company does. I'm pretty sure this is a really small company. Well, market cap 120.76 million. Revenue is like less than $1 million. Losses of $10 million a year. In the last half year, they had revenue of $330,000. So something has triggered the market when it comes to this company, because there was a nice little breakout. And I'm not looking at this company, not looking at the financials. Something must have happened on the 12th of September. There was a nice breakout after a period of time when the share price just went sideways. This is a beautiful, beautiful, beautiful chart, because you can just see the share price in a long-term downtrend, moving average crossover. And as soon as that happened, look what happened to the chart after that. Share price just went bonkers. Share price has gone from 6 cents to 40 cents on I don't know what, but what a great chart. So even though I know nothing about this company, the chart is singing to me. Okay, that's all I have for this particular technical update video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.